Oh, doggies. It's Bitcoin Basics episode. What is this, number 7?
I think this is 7. Yeah.
Yeah, and this is going to be some hungry hounds in a butcher shop full of fresh meat because we are talking Bitcoin, not crypto. We're going to do some shitcoin crypto lambasting over the next hour and a half. Daz, Seb, as always, delighted to have you in the studio. How are you two fine gentlemen?
Pleasure, boys. Going good.
It's always good to be back, guys. This is a highlight of the month, so I'm pumped to chat.
Dude, I don't know if you guys saw last night. I threw a brisket on the smoker like about 8 o'clock last night. And CK, I put it on Twitter. CK was like, dude, you're going to be up all night. And I was like, no, it's good. I'm going to, this thing just goes on autopilot. It's no big deal. I was up. I feel like I spent a shitty night at the firehouse last night, Dan, because I was up like every other hour because this thing just wouldn't hit the spot I needed it to wrap it. So I was up at like 1, 3, 5. Like it was just, I'm just fucking exhausted right now.
Brisket's
it's gonna be worth it though.
The irony there is that I was on the ambulance last night at work and I slept like a freaking baby straight through the night. No calls.
The have had a string of
once.
luck.
Yeah. Oh yeah. I think it's been good at our station. And the tower ladder went out once. I was on the ambulance, which is even better. It's like that wake up call in the night that reminds you that those guys have to go work and you get to just roll back over, get comfortable in that pillow, pull the covers up tight and go back to sleep.
You do the same thing I do. Like when you think you had a call and you're like, I'm not 100% sure. So I'm going to go back to sleep. Somebody will wake me up. I've done it multiple times. I'm just like, I'm pretty sure that's not me. I'm going back to bed.
You didn't hear
no one's banging on the door like, hey man, get up. We have to go.
The problem, guys, is when these tones go off, if you're in a deep REM, you miss the first half of the tones. So it's like,
I don't know how you guys, I don't know what your tone is. I was dating this chick who was a paramedic. When that thing goes off, I almost have a heart attack every single time.
Oh, dude, your heart rate skyrockets.
I could never date a paramedic or anyone, policeman, fireman, nothing.
The nice thing is we don't carry pagers. When we're not at work, for us as career firefighters in a fairly populous municipal area, when we're off duty, we're totally off. There's no responsibility to respond. So it's only every third day. You get kind of used to it. I mean, there's many wonderful parts of this career. In a lot of ways, the schedule is fantastic. The one trade-off is you got to run calls in the middle of the night. And no matter how long you do it, they don't get easier. They suck every single time. But Josh, I don't know if you're the same. When the tones drop in the middle of the night, I just say to myself, this is why we get what we get. This is why we get a lot of time off and some other decent.
Well, there's guys we work with that like throw temper tantrums in the middle of the night, like what the fuck, like, and it's understandable. Like everyone has that initial like, God damn it, I don't want to fucking do this right now. But you just like suck it up and do it. You don't throw a tantrum like a toddler. You see guys do that, and then that's what reminds me to be like, be a grown up. Like just go do your job. Don't be a toddler because you look like an asshole when you act like that in front of everybody.
Throwing a temper tantrum as a firefighter paramedic when the tones drop is equivalent to like an accountant getting pissed every time tax season comes around. It's like, this is what you signed up for, motherfucker.
Yeah, absolutely.
You know what? I was talking to my buddy the other day, and this is probably a episode that's not safe for work now, but I was talking to my buddy. He's a paramedic, and he gets this call out. And so he turns up at this guy's house. And of course, when someone calls the paramedic or the fire department, you usually assume that it's something like serious. So the guy answers his door and he's like, hey, how's it going? And my buddy's like, did you call the paramedic? And he's like, yeah, I need some help with something. He's like, what do you need help with? And he was just like, my wife is going to be back in like 30 minutes time. And I was playing around with the kitchen candle. The kitchen candle's now gone. And can you just help me pull it out for a second? And it is not one of the long ones. It's one of the like wide,
girthy candle
short ones. And it's gone. And he's just like, nope, I'm going to have to take you to the hospital for that. And he was like, my wife's going to be back in half an hour. What am I going to tell her? And he was like, you should have thought about that before you did that.
You're going to have to explain this to her. Dude,
I'm
so
sure
we had a guy
get calls like that.
I'm gonna finish with this story here. We had a guy call 911. He was at a liquor store. He was high on coke and heroin the other night at like 9 p.m. He calls 911 himself and says, I feel like I'm going to vomit. I don't feel well. We show up. We're looking for this guy. He's walking around ignoring us while on the phone with dispatch still. We get him in the ambulance and he calls his mom. he's explaining what's going on. He's like, I'm so embarrassed. And then he thinks he hangs up with her, puts it down. And then we're asking him like, dude, what did you do? We don't care. You're not in trouble. Just tell us what drugs you took so we can fix this. Right. So he's like, oh, I did coke and heroin. And he's like, he looks at his phone and realizes his mom is still listening. He's like, he hangs up on her and he was just like, I am full of shame. I have shame. I've shamed my family.
That's karma. That's
Dude, we
karma.
were dying driving this guy to the hospital.
People open up like flowers once the cops are out of the ambulance because our police respond to most calls with us, making sure we're safe. They're often in the back of the ambulance in the beginning in a drug-related issue. Then they exit and we're like, real talk now. We're the paramedics. What's up? And then just open up like springtime. Yeah. Okay. Getting into this topic because there's a lot that we could cover. I'm just going to start this way and then I'll throw it to you hyenas. We are going to talk some serious shit, okay, in this episode. But I want to do so cautiously because if you are someone that's interested in the crypto ecosystem and you own a bunch of different coins, at least I'm speaking for Josh and myself, we've been there. We used to own a bunch of different stuff. I had Tron, I had XRP, I had Ethereum early on in my exploration of Bitcoin. Bitcoin was always the main event for me. It's the first position I took, the largest position I took. All this stuff was on the side. But I had the diversified portfolio theory of crypto, just as I do in my equity portfolio and other things, thinking that, hey, there can't possibly be one winner here. You need, spatterings of different things. I just say this off the top because we want to be reasonable. We want to be gracious. And the trajectory for many people that land on Bitcoin primarily, it rarely starts there. People explore, people gallivant, and then they realize who they really want to settle down with. Josh is the same way. I don't know if your story is the same, Daz and Saber.
I was going to say, I mean, we obviously know each other's stories. We were there for the whole thing, but I totally agree. And it's just part of the human psyche to not only want to spread the risk around, which a lot of people view in the cryptocurrency space as like, let's spread the risk between 20 different coins because I don't know what's going to pop off, but it's also a deeper fundamental thing, which is why people gamble. It's that they think they're going to be the one that gets, that 100x that's going to pay off and they're going to retire. It's that survivorship bias that shows up from that one guy on Twitter that says that, he retired because he bought Verge at 10th of a cent and it went to 30 cents and he sold it and made millions of dollars. For every one of those stories, there's thousands of people that lost everything that they put in. So just keep that in mind. The survivorship bias is a huge factor in this. And it's also that human innate structure for wanting to gamble because gambling is fun. It pays off very few times, but when it does pay off, it looks really great. Also, just like gambling, keep in mind that the people that brag that they've made it big, very likely they didn't make it as big as they claim they did. They just want to look like they won. So just keep that in the back of your head as well.
Yeah, my journey was very similar to you boys. So luckily found Bitcoin first, made that, it was always at least 85% of my whole position, but then, used another sort of 10, 15% at times to quote unquote diversify my risk, right? And I'll get into where I started to shift that mentality a bit later in the episode. But I agree with everything you guys have said. It's part of that human psyche, right? It's like, well, why can't I be the guy that gets on the 1000x coin and all this sort of thing? And the more time you spend in that space trying to navigate, it's pretty. There's some pretty clear flags to say what most of those are scams, which we'll dive right into today with many examples I can sort of give you around why that thesis sort of remains true, but very similar. I think it's most people are going to go down that path of dabbling, and ultimately it is just exactly what you guys highlighted. Most of it is just gambling.
What kind of shitcoins did you own back in the day, Seb? Or did
all
you?
of them, every single one of them.
All of them.
You name it, I had it. No,
DGen. Seb was a DGen.
I came from the traditional financial background, and so like I traded futures for a long time and the equity markets and again like real estate and so on. And so I very much, exactly as you guys said, I very much understood the diversified portfolio in order to kind of spread risk. And so when I started entering into the crypto sphere, I was immediately drawn to Bitcoin. Bitcoin is what kind of made me realize, hey, there's this thing that is a digital gold. And that's kind of what drew me into the space. But then, if, exactly as you guys kind of said, you get all of these like glimmering shiny objects, and suddenly your attention is kind of drawn over to those things. So although Bitcoin has always been my majority holding, especially, well, it is now, it's my only holding. But back in the days when it was still my majority holding and I had a small allocation to other coins, what it took me a long time to really realize is that diversification in crypto versus diversification in equities is very, very different. And I say that in that diversification in equities, although I tend to support a free market, equities have gone through a lot of regulation in order to get to where they are. And to be able to trade them publicly, they go through a lot of, like, whether it's accountancy regulation, whether it is just to be a public company, you got to go through freaking countless steps in order to be able to meet the like pretty strenuous requirements and so on. And so the way that I kind of view it is that there is far less risk in investing in equities given the amount of steps they have to go through. Whereas when you're looking at most cryptos out there, all of these other altcoins, the problem is they're unregistered securities. There is zero regulation in this market. And so although I would never say that there's going to be absolutely zero value created in the altcoin space, I can tell you for certain that the majority, if like 99% of it, is just going to go to zero, because many times people have alternative intentions. They're trying to kind of shill their own coin to make money. And in the end, it incentivizes poor behavior and risk taking. And so as I kind of went through my journey, I kind of trended more towards Bitcoin, because I realized that diversifying in Bitcoin or diversifying in crypto versus diversifying in equities are two very, very different things. There's no regulation in crypto. There's significant regulation in equities.
So while we're on the topic of talking about or confessing our shitcoin past, Dom Bay had this idea, which I think is hilarious, and he brought it to Corey about having a confession booth at Pacific Bitcoin for people to go into and confess their shitcoin sins from the past. And I was laughing my ass off when I saw this tweet, like between the two of them. It's seriously hilarious. I mean, like, the idea was basically like, who should be in the booth? Who's the person that should be the parishioner, the priest that should be receiving and blessing you and telling you how many Hail Marys to do for your shitcoin past? I think Max Kaiser was winning the poll.
Yeah, he's fit for it.
He is. Yeah. Just see those orange shoes under the robe.
I think
would
it's
have thought Jeff Booth in the booth, right? Because he's that calming influence. He's like,
he was one of those as well.
The booth.
Everybody goes through it, you know.
What happens in the booth stays in the booth. I was going to make a blanket statement off the top for more of the newcomer that is a little confused here in the first 12 minutes of our discussion. What are you guys talking about? Bitcoin is crypto. Isn't it all the same thing? In our view, in our humble opinions, it's not whatsoever. And it's not that that's a position. I want to be a little bit nuanced in that position. I'm not set anywhere in my worldview, and a lot of new evidence could come. But based on what we've seen in the first, roughly 15 years of this project, is that one thing has profound usefulness and plugs into the 21st century marvelously, filling very deep, important needs in society and monetary systems. And the rest of it is extremely vapid. I would say, if I was to summarize this, just a one-line teaser for someone, it's, to me, Bitcoin is, I'm going to go ahead and use the word necessity as at least a small hedge position in everyone's portfolio. And these other crypto tokens are damn close to the last place I would ever allocate my hard-earned capital. Most of the rest of crypto is useless, opaque, full of leverage, scammy, tons of foul play. In many regards, it is the exact opposite of Bitcoin, both in architecture and principle. And this is what we have called on this show Bitcoin camouflage, because Bitcoin's conflation with the rest of crypto is part of the reason that it ducks for cover every 4 years. You have this massive bull run and all these totally ridiculously stupid projects and celebrities going on Super Bowl ads. The whole thing implodes. Everybody thinks Bitcoin went down with the ship, and it didn't. It's just slithering under the surface like an angry dolphin ready to emerge again. And that's kind of the phase we're in right now. But in a lot of people's minds that haven't taken the 5, 10, 20 hours to study this, the two are meshed together. And in a lot of ways, that's camouflage and reasons for the volatility and cyclicality of the Bitcoin price. Folks, we're going to take a moment here to announce our newest partner here at Blue Collar Bitcoin, and that is HeatBit. Josh and myself, Dan, found this product at Bitcoin 2023, and it immediately stood out to the two of us. HeatBit makes a badass 3-in-1 device. It's a Bitcoin miner, a heater, and an air purifier all in one. This puppy uses the same amount of energy as any regular heater, and it generates $20 to $25 worth of Bitcoin every month you use it. It's incredibly aesthetically pleasing. Dare we say sexy. It uses cutting-edge tech with 5-nanometer mining chips, and it's compact and quiet. To top it off, the price point is beyond accessible, starting at just $299. Earn passive income in Bitcoin while heating and purifying your home and control the entire thing from a sleek and easy-to-use app. Go to heatbit.com, that's heatbit.com, and start hashing at home.
I was just going to add that it's really interesting as well because when we hear about cryptocurrencies, that's very much like a misnomer. Many of these things, like when you actually look into however many cryptocurrencies are out there, I think the last time I checked, they were saying like 20,000 or something like that. So out of these 20,000 cryptocurrencies, very few of them are actually trying to even compete with Bitcoin. Many of them are just trying to do all of these other things. And the reality is that the basis of cryptocurrencies, which tends to be blockchain, which is obviously what Bitcoin is kind of built upon, blockchain, the whole role of blockchain is to create a decentralized ledger. And if you think about what a decentralized ledger really means, it's like, well, we want to remove it from a centralized party. We want to remove power from a centralized party. Yet when you look at all of these altcoins, you realize that actually most of them are governed by a centralized party. So you're basically expending all of this energy trying to do this thing that you're not even doing. And so I think it's really important just to note that we're paying for a centralized party to do this thing that many times we can get for free in a centralized party that, I don't know, you can just use
it's a
PayPal.
huge fugazi.
Yeah.
I think it was like 2017 or 2018 when this whole blockchain, not Bitcoin thing was prominent, and it was like, oh, we're going to use a blockchain for our chain of custody for X, Y, or Z, or IBM's going to use it for this, or I don't know, like. But the thing that you really have to understand is that the blockchain is an extremely expensive to operate SQL or like database. There's nothing so far that we have found besides tracking monetary goods, i.e. Bitcoin, that is actually, this is actually useful for. Because in every one of the other contexts where you use a blockchain, quote unquote, to track shipments or to track whatever it is, somebody else has to, from the outside world, has to say, yes, that's a verified truth. The reason that blockchain exists is because in the digital realm, Bitcoin can verify truth innately on its own blockchain because of the miners and because of the nodes and because everything works in concert for this to happen together. Whenever you're going outside of that world, trying to think of the top of my head, what is it called when there's a couple of different protocols that use I'm failing to think of the
like oracles.
That's what I'm looking for. Yeah, where they're using oracles, which is an outside the blockchain confirmation that something is true. You're negating the entire point of this because having it truth on the blockchain is the whole point. Otherwise, it's full of holes. It's just a leaking ship, and it doesn't work.
I think I'm accurate in using this terminology. Bitcoin verifies time and truth, you could say, endogenously. Most other protocols, especially proof of stake protocols, rely on some sort of exogenous source, often another proof of work protocol, i.e. Bitcoin, or some centralized timekeeper or oracle or whatever to verify truth. That's what's, it's a very deep topic, maybe beyond the scope of this, but that's what's so incredible about the Bitcoin protocol. A piece we've hinted at a few times on this show, which I'll mention again, is Gigi's article, Bitcoin is Time. And it talks about Bitcoin's internal timekeeping and endogenous truth keeping, I guess is a way I would put it. We'll link that in the notes.
American Huddle had a good point with Preston. I think it was just last week he was on.
I was going to bring that up, Josh. Yeah.
Yeah. Basically, the point that he was making was this is a VC wet dream. Like they had the ability, like VCs generally in Silicon Valley, what they've done traditionally for the last 50 years is make a series of bets that are going to take 10, 15 years to pay off. And most of them, 95% of them are going to fail. But they found a cheat code here with this token structure where they can take all of the risk off of their own shoulders. They can put the risk on the market. And all these retail investors that have gotten burned over the last 4 years, and these 2 cycles where this has happened, have finally wised up, have gotten burned enough. And the SEC stepping in is obviously, tossing all kinds of mud into the ring as well. but they basically took all of their own VC risk off their own shoulders, put it on retail investors, and they were able to cash in and win on every single one of these. So seeing how the sausage is made behind the scenes in the VC world, and it's no wonder that these people are such proponents of creating a new regulatory agency that's going to be a proponent for them creating tokens out of nothing. It's straight Ponzi scheme stuff. It's inherently.
Just to elaborate on that point was in that VC world, the big carrot there was like when a new venture sort of kicked off. Basically, that whole environment was pushing back on the fact that you didn't have a token. So you might not have had any use of a token, right? But if you wanted liquidity, basically the gist was you need to come up with a token because we can basically plug you into liquidity from day one. Right. Using dumb retail investors, unfortunately. Like, that's a really loaded term, and I don't mean to call anybody dumb by the stretch of the imagination, but that's generally how we are viewed, us wage earners who are keen to roll the dice in this gambling environment. They are using you as liquidity, and that was sort of one of the realization moments for myself, was really starting to really question around, what the fuck does this token do? Like, why do I own this thing with this token? Why does there need to be a token? Mm-hmm. And I was actually just at a recent meetup that we did in Cairns, where I live here, and a guy come along and was open with some questions, and he was very much questioning the difference between stocks and tokens, right? It's like, well, a token's just like a share in a company, where I was like, just to further to Seb's point, no, it's absolutely not. There is zero. When you own a share in a company, it is actually an ownership right, and it's regulated as part of, you own X percent of that company. So therefore you are theoretically entitled to X percent of the assets, X percent of the, the right. dividends, the cash flows, all of this sort of thing.
Of Whereas a productive entity too. That's absolutely actually producing things in the real world.
Otherwise they don't exist, right? Exactly. Mm-hmm. It's a really understated point, I think, that they are making widgets, they're making goods, or they're producing, providing services that provides real value in the real world. And those, theoretically, if there's a dividend at the end, if there's profit at the end, that gets divvied up amongst the shareholders. Not always, but there's a bit of nuance in that. But that's the general theory. Whereas with these tokens, there's absolutely zero obligation to share anything with you as a token holder in a lot of these. And this is where this terminology called tokenomics has come into play. Was a whole pseudoscience around how is it that you frame up tokens to be attractive, because we're going to have to offer something if we're not offering an equity share in this company, right? So we have to come up with very clever ways around making this token seem attractive to retail investors and into industry as well, albeit because there's a lot of liquidity sitting on the sidelines that wanted to allocate to this space. So this whole terminology around tokenomics is like, how do we make it attractive? Do we, release a couple of trillion of these coins and then slowly reduce the pie over time, so it's like, attractive to people if it's a deflationary type of offering, and you come up with all of these various scams with yield farms and staking and all these sort of things in order to prop up a bit of interest in what you're offering, which is basically fugazi. It's nothing. Like, there's no claim to anything.
It's actually very akin to the Wolf of Wall Street, the scene when he goes to work for that shitty little brokerage that is selling pink sheet stocks. And he's like, wait a second. So what are you guys doing here? Is this legal? And he's like, yeah, we're selling this stock called Aerodyne. He's like, it's like two guys working in a shed in their mom's backyard, creating whatever. But at least in that situation, there was actually a quote unquote productive company doing something. And when you bought that shitty pink sheet stock, you actually were getting some ownership of some shitty little company that's probably going to fail. But that's orders of magnitude better than most of these tokenomics shitcoins that are selling you literally air. Mm-hmm. And you're just speculating that some other idiot is going to, push this thing to 5x whatever you purchased it for. It's complete and utter garbage. Even worse than the pink sheet crap from Wolf of Wall Street.
No, and I think, Daz, you brought up a really, really good question, which is the question of, like, when you're investing in these things, what is the purpose of this token? Is this company does it even need a token? And I think this is a question we should all ask ourselves especially if we're kind of digging into the crypto world, just because humans naturally have a tendency to, like, we've even got a freaking meme named after it, FOMO, fear of missing out. We want to chase things which society is kind of running after. And we see this perfect example is like the 2000 tech boom. The moment websites kind of came to be, every single company needed a website. And all of a sudden it's just like, man, we're gonna be the next multi-million dollar, multi-billion dollar corporation. But in reality, 99% of those companies did not need a website. And the website or like the internet had not been developed enough to even offer much value to these companies. And so what you find is that most of these companies are just adding these technical jargon terms like blockchain in order to kind of draw in capital. And the reality is that most of these companies will never need blockchain. And it's also important to note that when it comes to decentralization and centralization, there are pros to each. We don't need to decentralize everything. Like centralization offers incredible benefits. It gives companies the ability to pivot quickly when they realize that they're not hitting their target market. It gives them the ability to move against what the majority want because they believe that there is actually an untouched market that the majority have not thought about, and so on. And so the way I kind of like to think about it is like PetSmart or Pets.com or whatever was one of the big companies that kind of went down through the tech boom. And they had a big website and everything, but they're a pet store. And it's the same thing. If this pet store decided to kind of, let's just put all of our goods and services on the blockchain, what purpose are they solving? They're solving zero purpose with that. They're a pet store. And so this is what's happening with most of these altcoins is they're trying to take advantage of this catchphrase called blockchain, and they're trying to suck in liquidity, and 99.9% of it is going to go to zero. And unfortunately, you're just going to lose your money.
So many good points here the last few minutes. I agree, Seb. The .com boom and bust is an uncanny parallel to, I think, what we're seeing in crypto. The vast majority, as you said, pets.com, balls.com, we could go down the whole list of those entities no longer exist, but the seeds were sown at the turn of the millennia for some of the biggest, most world-changing corporations and technologies. And I think the same thing is true here. I think we're at a point where a lot of the underbrush is getting burned away. You're seeing some sequoias stand. I would argue one sequoia. It's called Bitcoin, and it's going to be around for a long time, and it's a really big deal. We've spent 6 episodes explaining why Bitcoin is valuable. So I'm not sure it's worth our time rehashing that. If you're curious about that, go back. But this Bitcoin not blockchain thing, such an important point. I'll hit it through my own lens. Blockchains are cumbersome, inefficient, redundant, extremely expensive, right? To decentralize a ledger, as you just described. And there's very, very, very few applications where this makes sense. Most of the things that crypto is trying to do are better served in an equity-like environment, in a centralized environment. Money, the base layer of value settlement for Homo sapien, is one of the few areas where extremely robust, resilient, widespread decentralization makes perfect sense, so that we have immutability, we have censorship resistance. That's the application of money. And I think the caution I would give to people that are interested in other crypto assets that are competing in the realm of money is that I do, in a lot of ways, think it's a winner-take-all phenomena. Robert Breedlove has called it sort of the centripetal force of hard monetary networks. Seyfeddin Ammous has said, the risks of someone holding a money harder than your own. Like it would be counterproductive to store wealth or build a money application around a less secure, less liquid, less scarce monetary good. So I think this is something that people need to think about, because I do think there are winner-take-all phenomena at play here. And if you're competing in the realm of a decentralized monetary protocol, Bitcoin really has that boxed out, especially because it's open source and can be developed on in layers. And actually, I'm going to read a reference, a Lynn comment here too, is that she, in addition to monetary networks being this way, protocols tend to be winner take all. Because, you look through the stack, right? Whether it's USB, whether it's the electricity outlet protocol, whether it's the internet protocol stack, things tend to coalesce together once a protocol starts subsuming a lot of different applications in a certain realm. Howdy plebs, it is Dan here. I want to take a minute to talk to you about Crowd Health. What Crowd Health is doing in the healthcare space is nothing short of remarkable. If you're already familiar with Crowd Health, you can visit joincrowdhealth.com crowdhealth.com/BCB and use code BLUE for a tantalizing 3-month trial discount. As you probably know by now, the two of us are career firefighter paramedics. Nearly 70% of our calls are medical related, and we both rotate over to an ambulance. We're the first link in the chain in the healthcare system, and we see just how broken it is. Injured and sick patients stressed out of their mind, primarily worried about the incoming hospital bill. CrowdHealth offers an extremely simplistic and workable alternative to traditional healthcare setups for a freaking fraction of typical premiums. It's essentially the decentralization of healthcare, leveraging the power of Bitcoin alongside healthcare crowdfunding to drastically uncomplicate healthcare and give back control to patients. CrowdHealth negotiates bills for their members and finds them the best doctors and hospitals. Do yourself a favor. Visit joincrowdhealth.com/BCB. That's joincrowdhealth.com/BCB. And use code BLUE during sign up to receive a max discount crowdfunding request of $49 a month. Yes, $49 for the first 3 months. The Blue Collar Bitcoin podcast is brought to you by arguably the most legendary company in Bitcoin, CoinKite. They are the producers of the renowned Cold Card, the world's most trusted and secure Bitcoin signing device, built with a plethora of features fit for Bitcoin beginners all the way up to the most advanced of users. This device is a one-stop shop for your Bitcoin custody needs, and something the two of us have trusted for years. CoinKite also manufactures the Block Lock, a gorgeous e-ink digital display art piece sitting in the background of what seems to be every serious Bitcoiner on the planet. Block Lock can be programmed to scroll through key Bitcoin metrics including price, hash rate, next halving date, and much more. Boy, oh boy, will this thing look good in your living room or office. They are also the makers of many other security and fun products for all users, no matter their technical aptitude. Support our show and get a delicious discount on CoinKite products by following our affiliate link on the screen and in the notes, and using code BCB for 5% off the Cold Card.
No, and I think we touched on it in, I think it was a previous episode, which is in the kind of the whole Bitcoin crypto sphere, there's something called the trilemma. And the trilemma is obviously there's a triangle, and you can pick two of the three sides of this triangle. And those are security, decentralization, and scalability. And the reality is that what Bitcoin is picking is decentralization and security. Whereas many of these other crypto tokens, altcoins, so on, they're going for, given that Bitcoin is trying to build this like super stable currency, many of them are going for scalability and decentralization. But the reality is, if you don't have that, the security, well, then naturally people are going to struggle to invest in the long term in your token, because if there's a fear of loss, well, then what's the point in the token in the first place? And so exactly as you say, this winner take all kind of mentality is that over time, once people start to realize that Bitcoin is not crypto, once people start to realize that Bitcoin, its security and its stability is profound and unchallenged, naturally capital is going to flow into Bitcoin. And that's why this winner take all mentality kind of starts to arise. At the moment, there's still just not enough public knowledge. There's not enough recognition for the difference between Bitcoin and crypto, which is why a lot of money still flows into the crypto sphere in general.
Yeah, and I think, Seb, you raised such a good point. Decentralization and security are the fundamental pillars that you don't want to fuck with on a base layer. And I think that's where a lot of these other altcoins started to proliferate, was that argument around Bitcoin's inability to scale on the base layer, which was absolutely true. But that was only true to the extent that we were talking about base layers. So a lot of these other protocols come in trying to fix the scalability, where there was a trade-off on decentralization or a trade-off on security, where even I would argue the last couple of years, where we've started to see the second layers and third layers on top of Bitcoin really start to build out. I would even hazard a guess to say they had that made a little bit of sense, right? If Bitcoin was never going to scale on its base layer, it always needed higher layers. And we're going to get right into that in the next episode, I think, to really do a deep dive on the Lightning Network and other layers. But that is ultimately a zero issue now. the scalability comes on the second layers, and on the second, third layers, you do take a little bit of the trade-offs around the security and the centralization. That's absolutely true. But the real important thing to highlight and underscore there is there's been zero trade-offs on that base layer protocol. It is the most secure and it is the most decentralized. So I would argue very, very heavily against any other crypto asset in the industry around their decentralization. That it just does not occur. There might be a few fringe ones that lack network effects that are able to achieve some sort of decentralization, but the other big players, the other big ones that you hear about, like Ethereum, is probably the number 2 sort of asset in the space that most people will diversify and fuck around on the fringes. They have made massive trade-offs on both security and decentralization, in particular decentralization. So a lot of these assets get framed up under the lens of decentralized finance, where they are completely decentralized in name only. There is so much centralization that goes on in those protocols, and if you take the time to go and really dig into them, you will absolutely find that to be true. Particularly, and what's really, really important to highlight, I think, around that is this concept of a pre-mine. So anyone like not familiar with that terminology, that's the big red flag for me for most of these other assets, is this idea of a pre-mine. So the founding members, when you come up with a token, right, it's got to go through some period of centralization now in order for you to stand that up. And most of the time that comes with a pre-mine. Either you're mining that blockchain within your little circle to try and get a little bit of, quote unquote security around a bit of history on that blockchain. So you're going to mine it yourselves and you're going to keep those coins for yourself, or you just don't even bother with the the obscurity around that. You just basically go, well, we're the founding members. We're going to give ourselves 70%. We're going to issue a couple of trillion of these coins, right? Keep 70% for yourself. And there are so many examples of this, like Ethereum, XRP. They're probably the 2 big ones that come to mind when I think about pre-mines. And every time that they, the crypto ecosystem pumps, these guys are selling. It's a blockchain. All these addresses are immutable. You can follow the money, right? And every single time these things pump, they're pumping into that liquidity. They're using you as exit liquidity to pump their own bags. And most of the time, if we look back through history, like Ethereum, all they wanted was Bitcoin. So they did their pre-mines and they're like, hey, we've got this new token. We accept Bitcoin, right? So all of these quote unquote fucking decentralized systems, decentralized protocols that are out there, they're after your Bitcoin, mate.
Yes, they are. Well said. Most of these founders and lead investors, they want to accumulate Bitcoin and US dollars. They don't give a crap about the token you were the exit liquidity for.
I want to step back for 1 second
zero
here.
Examples. Sorry, Josh, before you move on.
No,
zero examples of an Ethereum pre-mine accepting Tron or anything like that. It's always Bitcoin or US dollars.
For sure. And Bitcoin's the entrance to the space. If you want to buy shitcoins, first you got to buy Bitcoin for most of these places. I wanted to just say that Bitcoin occupies this near perfect space where it's these characteristics, where it has no leader. So it makes changes extremely difficult. It's got this. So when these other tokens are saying that they're better than Bitcoin, they're saying they're faster, they're more agile, but all of those are characteristics that insinuate that there's a leader or someone that has the ability to change their characteristics, which, if you understand the whole point of this, the point of the system is to have no leader and to have a trustless system, which that is negating. The block space, they'll say, there's not enough transaction throughput. That's in order to allow the decentralization of nodes. I mean, to run an Ethereum node, last I checked, it costs about $70,000 because you need like 32 ETH, and then you need a system a computer that costs like $25,000 to actually run an archival node. So nobody's doing that. Nobody outside of like a Google data center or something, or you're renting a ton of CPU time, whatever. The other thing is block time. They say it's really slow, but that allows for the synchronization of blocks in order for the decentralized network to all coalesce and work together and be decentralized. So these characteristics that they insinuate makes Bitcoin weak or slow or, boomer coin are the innate characteristics that make it so great, because they allow all of us to have a $200 Raspberry Pi node running Start 9 And running our node, we're able to verify it all ourselves. It allows us to, the transactions can get very expensive. But again, then we go back to this layer 2 idea where this is a base layer technology. These second and tertiary layers are going to make the throughput better. And that is the point. Like if you're trying to beat Bitcoin on the base layer, you have to make a trade-off that has to destroy your coin in the long run. This is a low time preference ideation.
Yeah, I think, you know what, like that wording that you just said, that trade-off, I think that is so important. That's what I think people sometimes lose sight of when we're talking about the trilemma, is that when you look at that trilemma, which is the security, the scalability, and the decentralization, there are three sides to that. You can be security and decentralization like Bitcoin. Now, that obviously tries to do the scalability aspect on the other layers, as everyone has kind of described. You could also be the scalability and decentralization. The scalability and decentralization, if you really step back and think about it, they're kind of at opposing ends to one another. You can't have something that's scalable and decentralized, because as you get something that's scalable, it consumes a lot more data. And as it consumes more data, it means that people can't run nodes. And so it's not decentralized. And then on the other side of the triangle is security and scalability. But if you have security and scalability and you don't have any decentralization, why are you using it in the first place? Just go across to fiat currency, go across to any of these other centralized entities. There's no need to use blockchain. And so when you actually think about this triangle, there's only one viable side. That one viable side is security and decentralization. Outside of that, there's no, why are we doing this? I think it's just you're making something more complex than it needs to be, or you're trying to shill something because you're benefiting from it.
Very well said. I want to provide some numbers to what you said, Josh. These are old numbers. They're from December of 2022, not that long ago. But speaking to the node centralization dynamics of even Ethereum, and I think Ethereum is the best other cryptocurrency to speak to, just because it's the most direct, you could say, competitor, even though I feel like that's less the case with it moving to proof of stake. And it's far more decentralized than most of these other proof of stake protocols. So I think it's a fair place to pick at. And as you guys have expressed, when you go to that side of the triangle and you look to have increased throughput and more code expressivity on the base layer, you increase the processing power needs, the storage and bandwidth requirements, all of that. And so here's how that's manifest on Ethereum. As of December 2022, there's 6,700 Ethereum nodes. 4,400 of the 6,700 are hosted by a cloud service. 2,700 are hosted by Amazon. So there are only 2,300 of the 6,700 Ethereum nodes that are non-hosted. And most of the users and apps relying on, or that are doing this, are on Infura or Alchemy. And we have to go back to this Tornado Cash example. This is a little bit specific, but the Treasury sanctioned this privacy-focused smart contract, Tornado Cash. And the takeaway is that Infura and Alchemy basically rolled over and got their belly scratched like puppies. The point I'm making here, if you're confused, is that with these, hosted massive Ethereum nodes, which Josh referenced, are extremely complex, difficult, and expensive to run. That's an inherently centralizing force. And those centralized choke points are easy pickings for regulators. I think this pivots to another subject, which is just the obvious distinction between Bitcoin and the rest of crypto that the SEC has made. And a lot of people in the crypto space are sort of lobbing fireballs at Bitcoiners saying, I thought you guys were freedom focused and libertarian focused, and now you're cheering on the SEC. That's another discussion. But what I think the difference in distinction, Bitcoin being labeled as commodity, Ethereum and really the rest of the crypto space as of right now at this date and time looking like it's going to be labeled as security, is just that Bitcoin is built differently. Gary Gensler and policymakers understand how slippery of a hog Bitcoin is. It cannot be regulated the same way as the rest of the crypto space because there is no central choke point. There was no pre-mine. There are no founders. It is very, very commodity-like, and that's why it's labeled as such. Yes, there could be some draconian regulations that come Bitcoin's way, but it is designed in such a way that it can spin move out of those regulations in a way that none of these other tokens will be or will ever be able to do because of how they're designed.
Preach. And there won't be another one, right? It's got first mover advantage. So it was basically a fluke in order for Bitcoin to come to the fore through that decentralized from day one, right? So Satoshi released it to everybody. The first block that he mined, the Genesis block, had unspendable Bitcoin, so it didn't become part of that. So he can't be, sort of accused of a pre-mine. And then it was released to everybody who wanted, to that cypherpunk mailing list. Admittedly, that was a small group, right? But it was completely anybody who wants to run this. And throughout just people's adoption, that the blockchain started to get built out, and we started to build the chain through hashing, which we spoke about in previous episodes. But the point is, there can't be another iteration of that without some form of centralization. So us four could decide to go and run a copy of Bitcoin today. But at the end of the day, in order for that to be secure, we're going to have to go through some period of centralization where we start mining the blocks between ourselves, right? And we're lining our own pockets. And the real limiting factor for us to enable to do that, and we've spoken about this again on previous episodes, is the network effects. So we can totally spin up Josh Coin. I think it'll be a phenomenal, offering. Josh,
what would that coin be like?
In your name
That'd
only.
Be a fucked up coin. Yeah,
Dan Coin. That's right. I was paid off. To come up with Dan Coin. But it's going to be useless outside of us four. And even useless inside of us four. Like, what the fuck are we going to use this thing for, right? But like, we're never going to get the network effects that Bitcoin has gotten.
Yeah.
Even if you were to copy and paste Bitcoin and run it again from zero.
There's just no way to go back and create a situation where nobody would notice. Because in order for Bitcoin to bootstrap itself the way it did, the whole world had to be asleep at the idea of this, which they were. And nobody, I didn't even hear about this till 2011. This started 2009. Took 2 years before the first whiff of it came my way. Took another 5 years for me to have any idea or inkling of like the real profundity of it. And the rest of the world, maybe a couple of years after that. And it took a couple of years of bootstrapping from nothing for these Bitcoins to be completely worthless, not even having a saleable value on a marketplace in order for that to happen. And Satoshi mined, I did the math. He mined over 1 million Bitcoin, and that worked out to have him being the miner for like 152 days straight at 50 blocks per Coinbase every 10 minutes. So he had to have won the vast majority. And this goes back to the pre-mine that I think Seb mentioned earlier. Bitcoin had no pre-mine. So the first time a block was distributed, 50 Bitcoins were given to Satoshi, and on and on. And I think Hal was mining and probably some other cypherpunks at the time. But there was no like Satoshi gave himself 1 million to start with. He had 0. He didn't give himself any. He mined them. And then everyone else who competed to mine with him won whatever Coinbase transaction they won. Satoshi ended up with just over 1 million coins, which have never moved. He never spent them. If he's still alive, which seems like it's unlikely because you'd think that he would have spent some of that or sold some of it off. But the point is, he didn't give himself any advantage. He was just the only miner. So in order to make this thing work, he had to mine because nobody else gave a fuck. This is some worthless thing, some idea that he had that now became worth a shit ton of money. But you couldn't recreate that situation. Not at all.
Yeah, it really was an immaculate conception, you could say, an unreplicable one that came at just the right time. And I think, I forget which one of you said it, but you could reintroduce something just like Bitcoin, maybe better than Bitcoin, maybe more decentralized. I don't know. It's because it's run its course so much and the network effect is where it is. And it is as effective as it is proven to be at all these different applications. It's a Mack truck rolling down a hill at this point. Good luck pushing it uphill.
It's like the Virgin Mary and Jesus. There's so many religions that have tried to compete against Jesus, but he's the first virgin child.
Yep. Can't compete on another
100%.
level. Should we talk a little bit about proof of stake versus proof of work? I know we did this in a previous episode, but I feel like we need to do that at least for a little bit again, because I'll just start by saying we actually are in a different climate than when Josh and I first broached this subject. When we first launched the podcast, I forget, it's in our first 10 episodes, we did 2 episodes called Shitcoins, A Reasoned Refutation. Josh, I think that was
Those
the
are fun.
episode, by the way, where my audio was completely fucked
Yeah,
up
we had
and
to
we had
redo the
to
whole
run it
episode.
back. We recorded for like 2 hours.
It was
my
long,
audio was
man.
fucked. So we spent 4 hours talking about that. At that
We were
point,
so pissed, dude.
yeah,
I could hear. I should have known because it was his MacBook mic picking it up. You could hear papers shuffling like right next to the mic, and I didn't realize it. But afterwards, they were like, "Dude, this is garbage. We can't put this out to the 10 people listening."
I'm still bitter, dude. You owe me 2 hours of my life back.
Never gonna get it.
The point was there, though, that even when we recorded that a couple of years ago, Ethereum was still a proof of work protocol. At this point, the landscape is pretty much cleared out of proof of work other than Bitcoin. There's nothing really all that serious competing with Bitcoin in the proof of work sphere. All these other crypto tokens have pivoted to proof of stake. And that is a big deal. These two things, the mechanics behind them are totally different from one another. Who wants to bite that off first?
I think I would just start by sort of highlighting a few of the things from that previous discussion around the difference between the proof of stake and the proof of work. I think proof of work really is like when we talk about like decentralization, it also works on the respect like if we look at proof of work versus proof of stake around your ability to append a new block to the blockchain is randomized through that system of proof of work, and proof of stake is the exact opposite of that. And if we're to highlight, with Ethereum, right, they shifted from proof of work to proof of stake, where the centralization of the ability, Josh just highlighted, Dan just highlighted with a few facts and figures around, those players who have Ethereum nodes. But it's also like a big red flag for me, tying back in that thought about pre-mine is basically if you had a large pre-mine where, I don't know what the exact figures were for Ethereum, but it was upwards of 50%, right? I think it was as high as 70. Someone can probably root me on that. But basically, the premise behind proof of stake is if the bigger bags that you have of Ethereum,
Exactly.
bigger, the more likely you are to be able to append a block to the blockchain. Whereas like proof of work, it kind of does work in the same way. Like obviously the more miners you have, the more right that you're going to have, but it's a completely randomized approach to, if you want to put the work in and you want to expend the energy, your efforts are going to be completely randomized to add the block to the blockchain. And it does work out around, if you've got 50% of the hash power, you would expect to mine 50% of the blocks. But it does absolutely.
The major difference, though, I'm sorry to interrupt, difference. But the difference is like, so if I own, let's just say I own 51% of Ethereum, I've completely locked out the ability for anyone to ever compete with me ever again.
100%.
Yes.
But in Bitcoin, if I own 51% of the hash, it is theoretically possible for someone to compete. They just have to come up with a massive amount of capital to put a ton of miners on board, but it isn't impossible. There's still a game theory there that to play back and forth. But if you own 51% of the staking ETH, like you've captured it.
Locked it. Yep. Great point.
I think it's also important to note that like the difference between proof of stake and proof of work is that you're separating investors from security. And that's really important because in proof of stake, if you, as an investor, naturally you're also the security, because as the proof of stake goes around, at some point you're the one who's going to be verifying transactions. So all of a sudden you kind of skew the incentives in the system. Whereas in Bitcoin, if you want to invest in Bitcoin, you can buy Bitcoin, or you can become a miner and invest in mining equipment. But either way, you're under different incentives. And so each of those keep each other accountable. So we have a system with more, as we kind of touched on, I think Dan mentioned it previously, as we kind of touched on earlier, we have no single point of attack. We incentivize productive behavior. The more entities that manage, we've got the nodes, we've got the investors, we've got the security, we've got the community. All of these keep each other accountable, which in the long run promotes stability and security, which I think is incredibly important.
Man, I love how you just said that, Seb.
It was delicious, Seb.
There's to reiterate some of your points. I said this on with Harry Sudak recently. The difference with mining is that it's an indefinitely open market. It's like a game of King of the Hill on the playground where you're standing on top of the jungle gym and a new big fat kid's always going to come around and push you off. Like you have to guard that with your life, and it's going to be that way forever. You can never fully establish a position that's going to be there forever in the mining space. And then I don't know how you just said it, Seb, but this notion that investors and holders of the commodity good are not the ones making all of the decisions. And this is where proof of work is inherently commodity-like and proof of stake is inherently equity-like, which obviously the SEC agrees with. Proof of work is attached to real work and natural resources, that ever continuing churn I just mentioned of competitiveness. And proof of stake, as we've established, the more coins you have, the more voting power you have. This isn't necessarily a bad thing. Like, this is how companies work. This is how equities work. It's not a problem for a company to be centralized, but don't pretend to be a commodity when you're an equity is kind of my view. And if we were to draw the proof of stake parallel to, say, politics, Lynn Alden has said this before. It's like a political system where you get a vote for every $100 you have. If you're a fireman and you got $100,000 in net worth, you get 1,000 votes. If you're Jeff Bezos and you got a $200 billion net worth, you get 2 billion votes. Sounds like a rich get richer scheme to me, especially when you're trying to be a more base layer monetary good.
Absolutely.
A lot of concerns. There are a lot of centralizing concerns, and to be competing with Bitcoin on the realm of base layer settlement as a proof of stake protocol is very concerning to me. I actually think that it could make the system as it currently exists worse, more manipulated, more centralized, more concerning in my mind.
Well, if we're going to compare, Ether is definitely the biggest competitor to Bitcoin. And when we're talking about it, to shift to a different aspect of it, which is Vitalik literally runs Ethereum. It's a cult of personality with Ethereum. He has the ability, him and some cohorts that are around him, they hard fork this thing like once a year. And just to explain very quickly what a hard fork is versus a soft fork, a hard fork means they can change any of the parameters in the system with a hard fork. They can change the amount that is paid out every block. They can change any one of the parameters that make it what it is. So there's a very real chance that things in Ethereum can go very different in the future, simply because Vitalik can make a fiat decision that decrees that this is what Ethereum is now going to be. All of these nodes will follow him because they have in the past. There's been times with the DAO hack, they completely took back Ethereum from a hack. So they had a smart contract that failed. Somebody found some weakness in it. They stole a whole bunch of Ether, and Vitalik and his crew rolled back Ethereum. They hard forked it in order to take it back. Whether or not you agree with that, it doesn't matter. The point that I'm making here is that Vitalik single-handedly has the ability to take back and change this protocol however he feels necessary. That's something that should worry you, especially if you have a vast amount of your net worth in this thing, that it could at any moment, when he decides that he wants to change it to whatever parameters he decides are best for it, and maybe not best for you, that's the way this is going to go.
Yep.
And just to run back to talk about soft forks versus hard forks, Bitcoin does change from time to time. The last time was 2021 with Taproot? I think it was like November. Those are soft forks. So that means that there's no underlying consensus changes. Everything stays the same. And it's all backwards compatible. So your node will continue to run even if you don't agree with the change and you want to keep it the way it was. So one of these it's like forcing people's hands with a hard fork. With a soft fork, it's simply optional.
Mm-hmm.
Yeah, and it's important to note a hard fork basically creates a chain split in two separate assets, right?
Good point.
And then only one will win is typically the way these things go, which is why we avoid it at most costs, right? Just due to that fact that you can't create value out of nothing. So as soon as you split the chain, you've effectively doubled the value, quote unquote, if they were both to remain true at their current value. So one will trend towards zero, and one will keep trucking along as the original protocol. And if history is anything to go by, Bitcoin will more than likely retain status quo. Business as usual without any major changes. And that's why most of the protocol suggestions and changes are always backwards compatible. So what the really important point to highlight around that soft fork and why that's important is because it doesn't then matter if you're running an old version of your node, you are still in consensus. you are still contributing to the rules. It's backwards compatible, so that if you know, a major change were to be implemented and you're just asleep at the wheel, you're still part of that consensus network. You're still running a compatible version of the software. Not everybody has to update their nodes. And that's one of the really, I think, important points to highlight with these other protocols, particularly Ethereum. If you didn't get on the train, if you didn't get on board with any of those hard forks, you're out of consensus and you now own a bag of shit.
I think it's also... Well,
now you know you own a bag of shit. You just thought you might have before.
I was going to add one more quick thing to what you were just saying, Josh, which I think is so important. And I think people don't necessarily grasp this sometimes, which is stability and security comes with consistency. When we're looking at so many of these altcoins, the reality is, like, imagine going and investing in Conformity Co. Conformity Co is like the up and coming biggest company. And when you invest in it, it's all about making masks for the pandemic. But then all of a sudden, Ukraine war comes out, and suddenly they want to support Ukraine war. And then all of a sudden, I don't know, the next biggest thing comes out, AI. So now they're pivoting to AI. And this is what's happening in all of these altcoins, is that every single time someone speaks up and says, maybe we should do this, they follow suit, and they kind of follow the crowd in order to appease the crowd in order to drive capital. So the reality is that what you originally invest in, you fast forward a year, 2 years, 3 years, and it's nothing like what you originally invested in. And this is where Bitcoin, other than these security changes and these slight adaptations to the code so that it can evolve alongside the changing market, outside of that, it stayed true to its original intent, and it stayed true to its core values, which I think is incredibly important.
Yeah, and this is the whole like, you know, original use case for crypto was to decentralize finance, break down the current institutions that we have, where it's just been co-opted fully to be the exact same thing. So if you don't agree with the lobbying and stuff that goes on, where you get a concentration of wealth and people can dictate policy between their political ties, it's exactly what's going on now. And Ethereum is the biggest example of that. Like, they are in bed with the World Economic Forum and so forth. And I don't give a shit what your personal views are around them. They might do good, they might do no good. But at the end of the day, they are dictating, well, they have a say in global policy. And they're in bed with Ethereum now. So whatever they're going to want to enact, it's very possible to enact within that system, purely because of that proof of stake mechanism, whereby, you know, if you've got big bags of the shit, you can basically dictate who is allowed to transact on your protocol, where, you know, Bitcoin is completely the opposite.
Start9 operating system is a full-fledged, cutting-edge Linux operating system. Its functionality and adaptability make it an excellent choice for the users who value simplicity, efficiency, and privacy. Running a Bitcoin node? Start9 is your go-to solution. Setting up a node has never been so easy. With a Start9 server, backups are more than just an afterthought. At the push of a button, create encrypted backups, ensuring your data stays safe and sound, out of the reach of big tech companies. Start9's commitment to security goes even further. StartOS is encrypted for all LAN communications. This ensures your passwords and assets are always protected. The StartOS marketplace of apps includes everything from Lightning to secure messaging apps to secure password management. If you care to be sovereign in the digital age, running a StartOS server is a must. And the best part? You can download and set up StartOS on any machine, or you can purchase a plug-and-play Start9 server directly from Start9. Choose Start9 for a secure, streamlined, and flexible computing experience. When Dan and I are at the firehouse and we have finally delivered the orange pill to a new plebe, we recommend Swan for their first Bitcoin purchase, always. Swan has the user interface absolutely nailed. We have seen people go from no-coiners to Bitcoiners in under a minute. It's just that easy. The problem with sending friends and family to other exchanges is exposing them to all kinds of BS. You will never see Swan encourage your friends or family to buy Dogecoin. Instead, Swan educates. Swan produces some of the best educational content in the space. That is a big freaking deal. The difference between somebody who buys on a whim and sells for a loss and those that hold for the long term is simply an education gap. We have been using Swan to dollar cost average into Bitcoin every single day since 2020. If you want a family member to turn into a Bitcoiner, there is no better place to go than Swan. For daily DCA, IRA, or education, Swan is the place to go. You can try Swan Premium on us for free. This includes exclusive Swan content, market insights, and other discounts. Click on our link in the show notes and use password BlueCollarBitcoin.
Yes. When we talk about DeFi, decentralized finance. What's become ironic to me is that a lot of these DeFi protocols are built on something that at the base layer I don't see as decentralized at all. Like if you're going to build decentralized finance, you need to be building on a decentralized base layer. And increasingly, a lot of these crypto tokens, Ethereum included, are becoming more and more centralized. And that's where, yes, it may happen slower than some other people want, but it makes so much more sense to build DeFi on top of an actually decentralized base layer monetary asset, that being Bitcoin. I think another point to make here, and this also harkens back to a lot of what we talked about in the first 6 episodes, but it's not just that the ethos of Bitcoin doesn't want to change, or that's some principle. It's that mechanically it's next to impossible. And this gets down, you talked about the different competing incentives in Bitcoin and groups in Bitcoin, Seb, but even just from a how would you hard fork Bitcoin? It's so difficult to do. I mean, I've drawn the analogy of the Bible. You know, I've said before on this show, how would you change, you know, Mark chapter 7, verse 14? The Bible is spread so freaking thin across the globe that, yeah, you could make 10,000 Bibles with that verse changed, but it's not going to make a dent at all. You have to convince blokes like us who are running Raspberry Pis in our living room to update the code to try to pivot the network effect. It is like changing the electrical outlet. Good fucking luck, because this thing's not going to move. And so those incentives are what really forces people to soft fork and work within the rules and keep that sense of constancy, Seb. I think for someone that is newer, that wasn't around, we were babies back when this was happening in 2017-ish, but the book, The Blocksize War, is a great one. It gets into basically the best attempt that's been made so far to sort of hijack and hard fork Bitcoin. And most of the big money players, the big hashers, all the big power players in Bitcoin were behind this hard fork. And the node operators just said, no soup for you. And Bitcoin didn't change. And if it couldn't be done back then, it sure as fuck isn't going to be done now.
100%. I think it's important for us, while we're on this topic of like talking about the things that are, I think, dangerous for people to be buying into. I think include, if we're going to include altcoins in this, I think we should also talk about these platforms that allow people to get interest bearing, you know, on their Bitcoin or whatever. Even if you're a Bitcoin maximalist and you just I want to put it on some platform. BlockFi is a great example. Make a little bit of interest. Well, that didn't work out real well for anyone running. If you had your money in a BlockFi interest account, you lost it all. FTX, another example of that. Celsius, OneCoin, BitConnect, Quadriga. There are so many of these platforms, and it looks like Prime Trust is another one that's going up right now. So many of these platforms are just built by people. I'm not going to say that they're complete scumbags, but it seems likely that that's the way to describe them. They are literally running Ponzi schemes. They are robbing another person that's put their money on the platform to pay you, and this works for a period of time until it simply doesn't. And that's when it hits a brick wall. That's when things get turned down instantly. Your money's there. It's fucked. You've lost all your money. Dan and I, we've mentioned a friend of ours that lost a significant amount of money on one of these platforms. It's really sad to see it. We would highly recommend that you cold store your own Bitcoin using your own node. That may not be necessary. Like if you're just introducing yourself to this stuff, at least get a cold card. At least put this stuff in your own custody, because there are a shit ton of people that got stuck in these Ponzi schemes and they just lost all their money. That's it. It's gone.
I think we touched on this I think during the FTX breakdown. When was it? Maybe in our 3rd episode or something, which is FTX, when they obviously had to kind of open up about their balance sheet, they had something like 1.1 Bitcoin backing like $1.4 billion of Bitcoin. And so it's just like,
it's laughable.
This is mind-blowing. You realize that you can be this Bitcoin maxi that is never going to touch a single altcoin, and then realize actually your whole portfolio is invested in altcoins and you don't own any Bitcoin. And it's just, that's the reality of the situation when you invest in many of these centralized exchanges that say you're supposedly getting a yield.
Yeah.
The irony is, guys, and there are some concerns here on my end. Josh and I have talked about this, that there's a lot of growth that needs to happen in the Bitcoin custodial ecosystem brokers, onboarding platforms, we're still early and there's growing pains and we're working through them. That doesn't mean the project's useless, but I think it's worth at least acknowledging it, understand why people are scared. I personally understand why regulators are moving in going, what in the floppy fuck is going on here? This is insane. The level of opacity and scamminess is through the roof.
I think it's important to highlight some companies that survived all of this too. I think Lite is a good example. Like Lite, I mean, the fact that they didn't go belly up and they've made everyone whole, even though I know they were exposed to some of this shit, they at least had their shit in a row well enough to make sure that they didn't blow up and lose their constituents' money. There are people in this space that are honest, but the problem is that you don't know who they are necessarily. And if you don't have the ability to do the homework and know who they are, then you probably shouldn't put your money on their platform.
Yeah, I think that is a good point, though. I think a lot of companies that survive this round, it doesn't mean that they're perfect. It doesn't mean you should put complete trust in them at all. That's not what I'm saying. But it does earn them a lot of kudos and cred for the discipline that they clearly manifest. The point I was going to make there was that the irony with Bitcoin is that you sort of have two options. One is, hey, I'm going to leave this extremely precious, unique asset with incredible potential on a platform with a bunch of leverage, as I've said, a ton of opacity, no regulatory parameters whatsoever. Or I can, for the first time in human history, take custody of a digital bearer asset and have virtual complete certainty, totally verify myself that it's there and it's 100% reserved. These two options are really disparate. One is full of risk, and one is one of the least risky ways that you can custody anything in the world today. Why wouldn't you take option two? It does require some learning. It does require some ownership on your end, but you do need to get started. To go back to our last episode, self-custody, at least start experimenting, because you are going to need to know where the exit is. You should find it imminently, but at least you need to get your eyes on where that exit sign might be, because it's not that hard. And it's one of the key points of Bitcoin, to be able to not trust and verify that you have 100% of the asset that you believe you do.
I think, Dan, you were talking about kind of the irony, and I think that this is what I just find so funny, is that like during 2008, the peak unrealized losses in the US banking system totaled like $85 billion. That's unrealized losses, so they hadn't been realized. The banks hadn't actually admitted loss yet. Right now, unrealized losses in the US banking system top like just below $800 billion, like 10 times out of 2008. And so when we're talking about self-custody, I would argue that self-custody is not just in crypto. That self-custody is in our current banking system. Like, if you can get your money into something like Bitcoin where you can self-custody it, because these banks, even, I think there was a study done last year through the Fed, and the Fed basically acknowledged that there was something like 340 banks in the US that are effectively insolvent. They just haven't declared bankruptcy yet. And that's the case, is that many of our banks, our deposits, we will never see those if we started to see a bank run. And on top of that, the FDIC, as I think we've discussed previously, they've got like 1.6% to be able to back all of these assets in the banking system. So it's a ticking time bomb, and the banking system is no different to crypto.
Well, Bitcoin's the only monetary asset where we can absolutely prove 100% reserves. You take self-custody your Bitcoin, you hold it for yourself, you absolutely know that you have that in 100% reserve backing. Where, you know, the only equivalent in the other financial system is cash, but there does not exist enough cash that for the monetary base that's in existence. So not everybody can take 100% proof of reserve in the cash system, because the whole system would collapse. So it's a really, really important point to highlight. This is the only monetary asset where we can absolutely 100% guarantee 100 proof of reserve, 100% proof of reserve.
Yeah, and if you haven't done that yourself, if you haven't spent the $200 it takes to buy a node, set it up, get some free software, Sparrow is a great example, and watch it happen yourself. Like, watch your node verify your money. It's a pretty magical thing when you really think about what's happening in the background. Like, humanity has never seen anything like this before, short of custodying gold bars, which introduce an entire other scope of problems, because you have to keep some person from stealing those gold bars from you. But Bitcoin enables you to custody that money, know for sure, for fact, to verify it yourself, and also able to lock it up behind a wall of cryptography that makes it impossible for someone to steal, as long as you take some very simple steps to hold it yourself.
If anyone wants,
I could hear.
I'll put it out there. Get in contact with us. If you want us to hold your hand, just get in contact. Any four of us on here, I'm sure will take the time to help you.
I'm actually, I've got an appointment to go visit one of my boomer friends next week to go hold his hand to move his money off Swan, because he's petrified of how it works. And I understand it. Like, he's never done it. He's afraid. I don't know how much money it is for him, but it sounds like it's semi-significant. So he's worried that he's going to fuck it up and lose his money. And I get it. The first time I moved significant portions of Bitcoin, I shit my pants a little bit, and I think we all did.
We've all done it. We've all done it.
Yeah. So it just as Daz said, do it. Find a BTC Sessions video. He literally is the best in the world at holding your hand through this. Find one of his YouTube videos based on whatever it is you're trying to do. Just follow it and do it, and move small amounts of money to start with.
I could hear somebody listening going, guys, you can self-custody other crypto assets. That's true. You can. There are other crypto assets that you can hold in self-custody. That's a fair counterpoint. Where I would point to is the previous part of our discussion, which is the inherently centralizing concerns with that underlying asset that you have in self-custody. The reason Bitcoin self-custody is such a big deal. I mean, I could self-custody literally a piece of shit. I could go into the toilet and fucking pull out a shit and hold that in self-custody. So self-custody itself isn't amazing. What's amazing is what you're able to self-custody, the immutability of Bitcoin, the censorship resistance of Bitcoin, the confidence that the supply of this asset is not going to go up and that you're going to be able to move it and there's going to be liquidity there. Those are all things that Bitcoin's proven. And that's why it's so momentous that you can self-custody this thing. So that would be my counterpoint to someone that goes, I can self-custody my Solana. Well, yeah, I can go find a fucking turd with a piece of corn in it and self-custody it too.
Yeah, the other thing with these other coins as well is monetary policy. Go and actually dig up the monetary policy and go and see how many times it changed, who has control, and who can actually change it. And tell me what the fixed cap supply is, what the issuance rate is, and all that. There's so much. It's so opaque with most of these things and that's kind of where I got to, right? I said I'd sort of share my story around where I woke up to this thing, and it come down to me teaching others. And I started writing down a lot of this macro finance stuff that I started, so sort of the precursor to Looking Glass was I was writing articles from my friends and family around why I own Bitcoin. So what the
we remember those days with fondness, Daz. We loved reading that shit. That's why you came on our radar.
You've been there since day dot. So, and one of these articles I was writing, I think it was around fiat currency, and I started looping in Ethereum. So I started writing about why I owned Ethereum. And I very quickly realized that I'm very thankful I went down that path, because I don't know if I think I would have woken up eventually, but that was the sort of dawning aspect for me, is I owned a bag of this stuff and I didn't know why. Just because I diversified, right? Now, when I actually started digging down into the weeds around what is the monetary policy, what is the fixed cap supply, what is the issuance rate, who are the people who are, calling the shots here, and I went, holy shit, this thing is not decentralized. And that's the turning point for me, and I sold it all and went Bitcoin only from that sort of day on.
I think what's it called? Warren Buffett makes a really good point. He talks about this quite a bit way back when, and he says, I'd rather than kind of spreading my eggs across multiple baskets, I'd rather have one basket with a couple eggs in and watch that basket like a hawk. And I think that's the reality, is that many times when we look at these pension funds, when we look at these bigger institutions that do diversify, they diversify because they don't have the time to understand what they're investing in. And that's how they spread risk. With us as an individual investor, when we have limited capital, spend our time trying to truly understand something like Bitcoin so that you feel comfortable in being able to disseminate what the news is saying. Is this an actual risk right now, or is this just kind of more FUD? And actually, this is an asset that I really think is going to make a big change in the world in the future. So I think that it's important just to spend time truly understanding what you're investing in, rather than just spreading it thin.
I think I think Warren Buffett and Charlie Munger have incredibly good advice on everything except Bitcoin. I mean, like my own investing, I diversify into mutual funds generally besides Bitcoin. That is the only thing that I hold as a single asset. I don't buy, Tesla. I don't buy any individual stocks. I mean, I've played with that stuff in the past, but I've gotten to the point where I realize I really am a pseudo expert on Bitcoin, probably, but all these other things, like I don't have the time to spend reading through all these, financial statements for all these companies. I'm not going to do that. I just don't have the time. I don't even want to. I just want to buy some mutual funds for the amount of money I invest besides Bitcoin. And then I buy some Bitcoin, whatever I feel. And I turn it up when I feel like it's cheap. And I don't pause, but I turn it down when I feel like it's expensive, which I think is a good way to kind of meter your entry into this thing. And especially when it's up 30% in like the last month. Like I kind of meter back a little bit.
And that's why I think it's such like, this is why wage earners need Bitcoin, is because we've spoken about this so many times now, but it puts investment power back into the hands of wage earners. You don't actually need to spend days and days poring over financial statements and balance sheets to know if this equity is any good just to beat inflation, which is pretty much the position we've been forced into, right? Or taking on and outsourcing a lot of that risk through passive investment vehicles and so forth, where Bitcoin is like, it's the easiest thing to grok. It's the easiest thing to understand for wage earners. You should just be able to save money. You should just be able to put your hard-earned capital away in small chunks every single day, every single week, every single month, whatever coincides with your pay schedule, and over a long enough time period, increase your purchasing power. And that is like the dumbest way I can distill this thing down, right? Is just long time preference. And like just circling back and tying in the altcoins, like most of these things underperform Bitcoin over a long enough time horizon. And that's the thing we're trying to beat into everybody is, low time preference. We don't need to have high time preference when it comes to saving. We're trying to instill these values in you that if you park your currency in small tranches over a long enough time period, you will outperform just about everything fucking else that you can possibly invest in. And it is the simplest thing for you to do. You don't need to be tying into, is Vitalik going to fucking fork it this week? You know what I mean? It is just going to TikTok next block, come back in 4 years time, see what it's done, and you will quickly come to realize that you don't want to sell it after that 4 years. You know what I mean? Because it's the best money you can hold.
This recency bias thing is so important to hit on while we're talking about altcoins, because if you look at coin market cap, top 10 coins, Bitcoin's always at the top. That bottom 9 is on a constant churn. And you're going to find some crypto bro out there every single year that's going to point you to some obscure coin and say, look at how this thing is done. It's outperformed Bitcoin. If I was to move that to, say, the equity realm, imagine saying that like Apple or Google are bad equities to have owned for the last 20 years, because every 2 years you find the best performing small cap stock on the planet and compare it to their performance over that 2-year time frame. Makes absolutely no sense. Nobody can predict the future and win the lottery like this over time. And so, when you stack these altcoins up against Bitcoin, they tremendously underperform on a long-term time frame. And zeroing in, spending your time, energy, intellectual capital on understanding Bitcoin first, I think is one of the things I want to leave the listener with. Fidelity published an awesome piece called Bitcoin First. And basically the takeaway was study Bitcoin first. And for me and the vast majority of people that look into this stuff seriously, in my opinion, they find that Bitcoin is by far the most immutable, saleable and liquid, decentralized, and anti-fragile protocol out there. And for that reason, if you're interested in value accrual and something going up in price over time as a good investment, it's hard to pick anything else that can compete. Yes, there are some good ideas out there. Some of these other crypto protocols have some interesting ideas, but you can build the coolest money application and the sexiest UX in the world on top of monopoly money, and nobody's going to give a shit. And this is part of the reason, back to the stack, the protocol stack and the open source nature of Bitcoin. I think it was David Bailey said recently, the rest of this crypto space really is the test net for Bitcoin. As time goes on, I think we're going to see a lot of those applications get gobbled up by the real gorilla. I think we hit a lot here. Anybody else got any other chum they want to throw in the water before we hit the red button?
I think we honestly went through just about everything. I was going to bring up the Howey test at one point, but I don't think that's going to really fit it towards the end here. So
the only other thing I had on my list, which is probably worth just highlighting as well, is the way that these altcoins, it's kind of off topic, but not off topic, but coming from sort of left of field, is the way that these tokens are advertised to you. So most of these tokens come through YouTube clips, and if you dig in the back end, like BitBoy Crypto is probably the classic example. He charges something like $50,000 in order for him to mention your token on one of his videos, right? And that's basically what they're using is you as liquidity. You degen guys like watching YouTube clips around, what's the next thing to pump? And it's like the only way you're going to shift that needle is if you're like first to get in. And again, it's just short time preference stuff. And even sophisticated financial education platforms like Real Vision. Real Vision was phenomenal. I learned so much from Real Vision, right? But then Real Vision come out with this new offering a few years ago called Real Vision Crypto, where they're starting to like really understand this sort of stuff. And the number one question you need to ask yourself is, what am I paying for this education, right? Real Vision Crypto is free. It's a massive, massive production. Like, it's not like us Bungie sitting on a zero cost platform, to talk smack and upload it ourselves on a podcast. That's a different thing. But they are a very sophisticated video production system, and it costs zero. Therefore, somebody is paying those bills. Somebody is paying to get on and shill their coin. And the biggest, one of the ones that come to mind was this scammy coin called Internet Computer Protocol, ICP.
I remember that one.
And this guy was on Real Vision with Raoul Powell and talking up the next, this thing's going to change the way that we look at computers across the Internet Protocol, blah, 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 blah. Literally the next week after that aired on Real Vision, it dumped, and it dumped hard. And like many argue, it was basically the founders dumping their bags into that Real Vision community.
It amazes me that these platforms exist. I mean, that they keep proliferating, because Real Vision, I just saw something that, I don't know if they sent me an email that I've signed up for years ago or something, but they're pivoting into something else now. Who knows? It's probably AI or some bullshit.
Yeah, it's AI tokens.
Yeah.
It's the next...
Of course it is. Yeah. I'm just saying, like, these people are just, BitBoy's a perfect example. Dan and I saw him in Miami. We actually joked about beating the shit out of him just to get some, like, just for fun. Like,
go to jail, lose our careers, but blue collar Bitcoin would blow up, dude.
We beat the shit out of BitBoy. That guy is such a douchebag. And anyway, it's hard to take. You can't take these people serious after you've seen what they do. You've seen behind the curtain, like, what a bunch of nonsense this stuff is. These are just straight Ponzi schemes that they get paid serious money to shill to people. And where was it? I had something in my notes here. Oh, so the crypto playbook is basically create a sense of urgency, pitch it as the next big thing, get celebrity endorsements, BitBoy, whoever. And then, it takes retail a couple of burns before they realize they got fucked. And this cycle just repeats itself. But I think at this point, with the SEC stepping in and putting the brakes on and throwing some people, putting some lawsuits on these clowns and stopping the VCs from continuing this nonsense, we're going to finally get to the brass tacks on this stuff, which is, it's almost all bullshit.
Yeah. And why do we care? Why do we care? It's because it hits home for us. I think a summary point for me is that I really feel like Bitcoin is profoundly empowering for average folks, the middle class and below. And I think crypto is incredibly disempowering for average folks, wage earners, middle class and below. I think that is the essence of why they are polar opposite. And there are a lot of people, we can make fun of crypto bros all we want, but a lot of these crypto bros are real people with families and incomes and not a ton of money to lose because the treadmill's speeding up. And that's true of the average, in our shoes, career firefighter. Money's getting tighter. It's harder to carve out that secure financial position in the future. And people should not be patsies at the table. We don't want regular folks to be exit liquidity. That is why we care.
Yeah.
That's what
From
we
the
get.
perspective I think that we take, Dan, a couple of the guys that were crypto bros at our agency have been real quiet for a prolonged period of time. So I think it's finally landed in their minds that like they were just dead wrong.
Yeah, this is why we keep at it, though, if you're a Bitcoiner, because a lot of those people, to draw the religious parallels again, their hearts are softened over time as they are like, why are Josh and Dan still talking about Bitcoin every week? I thought this whole crypto thing was dead. And then 2-3 years later, they come back and go, oh, this whole Bitcoin thing is different. And there is one discovery here. And I think that sort of narrative and progression is indicative of a lot of people's journey into and out of crypto.
As each of these big shakeups happen, we only get louder, right? The crypto bros get quieter and we get louder, and there's a reason for that, you know. Yep. And just to echo your point, like this is what we're doing. This is why we're doing this every month. Is the wage earners? You're our brethren. You're our brothers, our sisters. You know, our mothers, fathers. We care, and it's getting harder and harder and harder. And you're going to lean into. You're going to want to. You're going to be like forced into desperation where you want to gamble. You know, your degen nature will shake out because it's getting so hard to navigate. And we're just trying to tell you is put the brakes on. You don't actually need to just understand this thing. Take a long time preference approach to this, and you'll be fine in the long run. Like this is ultimately why we show up every month, is just to try and break these things down. Most of this stuff is gambling. It's going to appeal to your desperation side of needing to get ahead, but you don't need to.
Unless you want to get fucked by the double-headed Black Mamba that is crypto, I'd probably stick to Bitcoin.
the double-headed Black Mamba. I've got a lot of cartoons dancing through my head at the moment, and
it is a harsh ass reaming. I mean, I've been through a harsh crypto ass reaming, and it's not fun. And as someone said in the beginning, you hear the success stories, but most people have a really sore asshole when they get done with crypto.
They sure do, Dan. I think we know what the title for this one's going to be: Double-Headed Black Mamba.
Basic 7, the double-headed Black Mamba.
Wow, this kind of like went off the rails here a little bit. Like, how did they get to Black Mamba? Double-headed. Weird. I don't know. I'll listen to it anyway.
Ends up on cock.
Yeah, it does.
Only beautiful cocks, though.
Yeah. Yep. Thank you, guys. As always, we got a couple more of these and can't wait.
Cheers, guys.
That was awesome. Thanks a lot, guys. Honestly, I think this is I think it's the most important talk. It may not necessarily be the most technically interesting, but it's one of those ones that we all go through this, and there's no judgment going into the altcoin space. It's more just, hopefully we can assist you on your way to look at this stuff objectively and to be able to actually question what it is you're investing in. And as Daz mentioned earlier, like if you are investing in any of this stuff, just ask yourself, what is the point of this token? Like, is there actually a benefit to this token? Because most of the time there won't be.
Avoid the double-headed Black Mamba. It's like glass and sand when it goes in.
Beautiful.
I'll tell you that.
Poetic.
There's no lube. None at all.
See you guys.
Take care.